The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome to the show this morning. Sorry, we had some technical issues with Skype, but that's over. Thanks for being patient. I'm showing right now in the den, we're looking at our indices profile heat grid. And we're looking at our daily breadth calculations. Now we're looking at our weekly. We're looking at our 4-hour. And you just don't see any red here. So we've gotten above some inflection points. We were talking yesterday morning about the S&Ps not getting addicted to one thing to trade, but we were looking at this situation here. I'm going to pull up our chart really quick on the S&Ps. Here's our daily unfair high around 2065, 2066. We talked about that may be a chance to pick a little battle there on the short side, but right now, again, you know, I've gotten stopped out of this trade twice. A lot of the breadth calculations are extremely positive now. The weekly has been a little overextended, but, you know, we've gotten above a major inflection point again. It's not time to be short. That's the easy thing to say here. And looking at the globe from a breadth calculation standpoint, man, you can't deny that quite a few indices have elevated up. In my opinion, it's a little bit liquidity driven here. So not to fight the tape and actually having a close above that 2065, 2066 area yesterday, you know, all bets are off on the short side right now. It's easy to do that and block that side out. Now, we could get a retracement back down into 2065, 2066. And a weekly close. And let me just kind of go back to the S&Ps here. I had the Japanese yen up. We're going to go back to that in just a second. Let me pull the S&Ps up on our e-signal chart here. Tom's been talking about this thing just kind of goosing the highs here. And, you know, again, sometimes these types of moves happen before we have a change in direction. But right now, I mean, you have literally, as evidenced by that breadth calculation across the globe, and we've been relatively positive. You know, the weekly has not really wavered that much on the S&Ps, but you know, the rest of the globe looks extremely good now. We've come back and looked at that 2065, 2066 area this morning, bounced back up. We're going to talk about this a little bit more when we come back, folks.
John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all TAS Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the TAS Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the TAS Profile Scanner Plus at the front page of TFNN.com. The TAS Profile Scanner Plus is such an amazing piece of software that we're even offering a no-questions-asked money-back guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the TAS Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. I'm showing the 60-minute breadth on our S&P chart. And I'm not trying to say, hey, wow, look at what you should have done. You know, when we get into these inflection points on the dailies, we have a wide profile. We try to play the odds and, you know, banking something against the numbers yesterday. Again, sometimes we have to take stops, but, you know, this feeling that we were getting a little heavy before, you know, I still stand by that. We're coming up into inflection points. Our weekly breadth, you know, has just stayed super positive. In fact, positive to the point where it was, you know, possibly overextended. At the same time, the daily was getting a little heavy here. So again, you know, we just try to play the odds as we see them. I'm not specifically focused in my trading portfolio or portfolios on overweighting that S&P trade. So sometimes we, you know, again, it's just a part of the equation. And what we generally like to do is try to find some kind of leverage on some overhanging, excuse me, guys, on some overhanging, you know, ETFs, notes, golds, S&Ps, etc., and then try to find some opportunities within. And what we're going to do in the webinar to try to increase the odds. And what we're going to do in the webinar on the 20th is, you know, we find opportunities all the time. I mean, there are over, I think, 4,000 instruments in this particular scanner now. And you can find some decent things acting a certain way with that many pieces of data in the sample set. So what, you know, is really appropriate is, you know, when you find these things, you know, what type, you know, do you just go long or go short? So what we want to do in the webinar is talk about different strategies after finding some of these opportunities. So it's find the opportunity and basically apply the appropriate strategy. If you guys are using Thinkorswim, I don't want to, Tom, I don't want to talk about any other brokerage firms. If you're using Thinkorswim, it's actually a platform if you've used it long enough. That was the old Options Express platform. And when I was in Chicago, those guys started up Options Express right on LaSalle Street. It was I think about 2 blocks from the Board of Trade. I used to walk, I forgot the guy's name, but we used to go up there and do some business with him. And the whole platform was focused primarily, around options. And they have really, built that platform out very nicely. But one of the things about if you're using Thinkorswim, you can, if you know this already, and obviously watching the Thinkorswim during, the lunch hour, they talk about different strategies for different situations. It's very educational, and what we want to do is not get too complicated, but be able to apply sometimes strategies that give us a little wiggle room for a better, buffer if we're wrong and we want to just kind of stay in the trade for a longer term view. The worst thing in the world for me is, to get stopped out once, even twice, and then the product that I'm looking at moves in the direction I wanted it to, and I've gotten frustrated and I'm not in the trade anymore because I'm tired of getting stopped out. If you guys have ever had that happen, you know what I'm talking about. So a lot of times wrapping some kind of option hedge around these particular longer term views is so settling. I mean, you can go to the beach for a couple of days and just kind of not have to worry about these things because you've got an insurance policy. So that's what we want to do in the webinar is kind of figure out, what's the appropriate strategy for different situations. We're going to talk about that a lot. Yesterday, and again, the S&Ps have already come back and retested this neighborhood 2065, 2066. But, yesterday we were, okay, still think the market may be kind of bouncing around within this big, wide daily profile and maybe revisit 2018. Well, that didn't happen. So one of the things that, in addition to taking stops, the 10-year has really, we talked about this as the easier trade when you're looking at those two products together. The 10-year now is coming down into the unfair lows on the daily, 130.07. When I say easier trade, we had an indication, take some weight off with the yellow bar here. This was in the scanner, new profile appear. And it seems to me as the market goes up, these notes, again, move sideways at worst. And the easier trade to try to, put those two together right now is to look to buy support on the notes. That's still the case. We looked at the financials related to that, and these things just blew a gasket yesterday. This was another stop out situation. We got above the weekly unfair highs, a little bit too rich for my blood on the north side here, above 2237. And, this is kind of amazing because, these guys, rising tides lifts all boats, but, these guys in this particular sector, JP Morgan's, the Bank of America's, which has, I think, some announcements this morning. All these guys need a widening yield curve to really step on the gas pedal making money. But as Tom was saying yesterday, if the game's rigged and you can pay the fines, I guess you've got another way to make money in this type of environment as a bank. Or hire inept employees, which is seemingly what Wells Fargo does. So as we look at this, we were wrong on the market coming down, or I was wrong. And we look at the financials relative to that note play, non-widening yield curve, the market, possibility of coming down. These financials really squeezed some people yesterday. And you got to take a look at these inflection points. And again, we talked about earlier, frustrating thing is to keep taking stops and then the thing goes your way. A trade like this, again, this is a little bit farther north than I would like to see it. Having some kind of option hedge on trades like this, if you're looking for a longer term situation, is not a bad thing. So this type of scenario, again, a lot of times, if you wrap an option hedge around a directional trade, you don't have to, it'll just naturally kind of cancel itself at one point. If you're doing something like short XLF, buy in the money calls on the XLF, or out of the money calls. We're going to talk about the risk reward on stuff like that during the webinar, but we'll be back. 4 minutes.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We're finishing up with the XLF, and for folks who are trading this strictly on the underlying basis, we were talking about taking stops. The 10-year, again, looking like it's staying within at worst in the balanced area on the daily. Climbing above 2037, 2056. Those are the weekly and daily unfair highs. I just want to show you in the scanner what this looks like. I'm gonna go to my ETF section. Here's the daily. Man, you don't see this often. Wow. Here we go. So I'm looking at this cell structure here, 1-1. Got to pay attention to stuff like that. We've cleared noise levels. It doesn't say top. You just got to be aware of that now. And being on the short side of that right now, I mean, you're basically breaking every rule in the book. So taking stops, not a bad thing. We're going to take a look at the oil situation here. And this big meeting on the 17th, is that when it is? The 17th, the OPEC meeting talking about squeezing supply. We talked yesterday about maybe taking some weight off around 41, 31, 41 and a half. You've got a lot of congestion up here. I think, this thing's just going to sit tight. Some people are concerned that are short probably about, what's going to happen on the 17th. If you completely want to roll the dice, you stay long. But if you want to just kind of wait and see what happens, we could get a move up if they, do the rhetoric that everybody's talking about. Remember, even if they talk about shortening or squeezing the supply, this market could come down on that news. You never know how. I mean, the market's rallied. I mean, when I say the market, I mean the May contract has rallied from a low last week of 35 up into 42 already. So what's that? 35 divided by 7. That's a 20% move in a week. Already happened. So that news, it may be a sell the news type situation. Even if they come out with, hey, we're going to squeeze supply. So just remember what's happened recently. And it's not like they just invented this meeting and they were going to talk about shortening supply. This has been kind of in the talks for a while, and we've moved 20%. We could, if you've watched oil and you traded oil for a while, that these type of news announcements can give some knee-jerk reactions. So my suggestion is just to, not be in this market right now. We've reached targets on the upside. I know we're trading above 41.31 on the weekly, but we've still got another kind of line of resistance up there around 42.5. And that's the way I'm looking at it. I think the risk is to actually be in this market right now when it comes to oil. Let's take a look at gold really quick. Well, if we can get it to come up here. Long term still looks really good. If we take a look at gold, here's our weekly. Not a lot of new profiles attempting to appear there. Nothing really going on. Here's the daily. I know we've gotten below 1242, 1243, which was support yesterday for a short while. Again, I think the long term on this is still good on the north side, but again, anytime on the long term, anytime we get below 1211, 1212, that's going to have to be looked at as a stop situation on the ultra long term. On the intermediate, I think you've got to just kind of sit tight. You've got 2 inflection points to pay attention to on gold. I'm going to go into the scanner really quick. And there's those inflection points, 1243 rounded off and 1212 rounded off. Here's our multi-time frame view here. Okay, I wanted to just take note of the yen here. We talked about, the breakdown below 112, the Bank of Japan, and there, may be some other measures, other government intervention type situations. We talked about this profile attempting to appear. It's happened, and we talked about getting another inflection point a little higher. The yen has reached 109.55. That inflection point's 109.61. So we've gotten very close to that level. And as we talked about the past couple of days, it may be a decent situation to wait until we climb up into that inflection point to continue this down. And we talked about ultimately this 105, 106 area may be visited. So I think you've got a decent place to play defense here on the yen on the short side on JPY USD. And that's the way I'm looking at it. We don't have to explore this fair auction immediately, but I think, this is something we can look at to head a little bit lower. Let's take a look at the dollar. Big move yesterday, inflection points. Okay, so a situation similar to the yen. We've had a decent bounce here. We have some new inflection points we can look at. We've spiked above. Now we're trading below 94, 94.93. I'm looking for this to explore the fair auction down below. It's nice that we have a chance to play defense. We've rallied above that particular inflection point this morning, but we've reversed. I like the way this is acting. And again, I think it kind of goes in tandem with that yen trade right now. We're going to take a look at the Shanghai. We talked about, the U.S. stock market looking for decent reasons to go north. The Shanghai has kind of continued to stay above today, 30.56. Crude oil's rallied. Notes are not coming off terribly. All these things are positive attributes when it comes to the U.S. stock market looking to these particular features to get happy again. So that's a little concerning for shorts on the U.S. Plus, all the internals, as we've looked at, are extremely bullish on most of the global indices. We're going to take a look at the XLE. We kind of left this out. This is something that we talked about, a DMZ between 63.09 and 64 and some change here, 64.28. The reason I'm looking at this, we're going to go into the XLE sector and look at some of the internals. And here we go. And as you can see, that top is right there. We talked about the DMZ between these two inflection points here, 64.28 down into 63.09. The XLE breadth extremely positive, but remember, if you've had some wins on the board in some of these internals in the XLE, and some of them we looked at haven't exactly exploded, but again, they've done a little bounce here. I wish HP had moved a little bit higher, but you can't really complain about 56 into 60 in a matter of, what is that, 1 day, 2 days, 3 days? We're going to be right back and look at a couple of XLE stocks, try to figure out where the leverage is when we come back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. TFNN has just announced a new Tiger Dollar sale that will run through this coming Monday only. It's tax day on April 18th, and what better time to lock in extra savings on any TFNN good or service with the purchase of Tiger Dollars. From now through April 18th only, we've doubled the bonuses that normally come with any Tiger Dollar purchase. Instead of a 10 to 20% bonus, we've doubled each number, and you can now get a 20, 30, or 40% bonus on whatever you spend. Tiger Dollars never expire and can be used for any TFNN good or service. Once you purchase your Tiger Dollars and receive your 20 to 40% bonus on whatever you spend, you can then apply them to your subscriptions going forward, as well as any course, workshop, or service that we offer at TFNN. Don't forget that tax day falls on April 18th this year, and now is the perfect time to get your Tiger Dollars. For all the details and to get your Tiger Dollar bonus today, visit the front page of TFNN.com now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. Just trying to correct something here with the tech guys. Let's finish up with the XLE. We've had a lot of wins on the board here. If you've been looking at buying the stocks that have showed some strength, we've talked about this. A lot of times on this show, sometimes I forget, to go back and revisit things we've talked about. It's just kind of almost get addicted to what's the now. And some of the things we've said days or weeks ago, we don't actually go back and relook at sometimes. So, some of the stocks that were weak in the XLF, individual stocks, some of the stocks that we're looking at from the long side in the XLE, since oil had been in the high 20s, we had been kind of trying to find the strong of the XLE and use some of the inflection points provided in the scanner and getting above profiles and looking at the price of oil. So there's been some decent opportunities here, but there are also some stocks in this sector that have lagged a little bit. And, we want to always remember that, the relative strength trading game, if you will. Here's Baker Hughes. This is something, there's technically speaking, you could look at this as, hey, we're forming a double bottom here, blah, 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 whatever. But you've got to look at the relevance of this particular instrument to what else is going on. There's a problem here. And I don't know anything about Baker Hughes fundamentally. I don't read any news reports on it. I'm looking at the relationship here. And if you're looking to buy, again, people, not a well-versed investor or trader that's in the den, or some of the guys watching the show, but a novice out there that's trying to find something on sale and do dollar cost averaging, you can get really hurt by messing around with something like this. This is the situation that's showing itself relative to what else is going on, especially in this market. We've got, and we're going to replace Cameron International here. Sorry about that, folks. NOV, we're going to take a look at this one really quick. Yeah, this one also, this is something that it just seems like it's going to die a slow death. So again, we had a little bit of a pop yesterday, but something like this, you're looking for reasons to short it. This is one, and again, somebody might be stuck in this. I know I'm not saying anything that they want to hear. Let's pull up NOV on our e-signal here. These are ones that weren't exactly on our candidate list, and I want to show you why. And I also want to show you how this thing has acted in the face of crude oil really rallying across the last couple of weeks. This one was below profiles. Again, has really, trying to find something on sale, hoping that it rallies when oil is poised to rally, and it's been showing relative weakness. This is a lot of times how those things work out. So again, we're always trying to find the strong of the strong. To buy and the weak of the weak to sell. Just a good example of that. So do you short any of these XLE stocks? I think you just have to wait for that announcement to come out. We've had a great run. A lot of these stocks some of them have doubled. Some of them have had some decent rallies here, but they can go higher. Remember, I mean, oil could go back to $50. It could go higher than that. So always keep that in mind. I think this sector is not one to play around with at this moment, especially before the 17th. Let's talk about, let's see. Yeah, let's talk. I mean, wow, look at this. You rarely see this. This is amazing. We're going to go into the S&Ps. We're going to look at the 240 chart. And yes, we got pretty overextended yesterday. But when we cross these borders, especially the index inflection points, and we're giving you those right here. That we give you these in a couple of places. If you mouse over these cells up here, you see it. You can see it in the breadth charts down here in the lower left. When we cross some of these borders, even when this 240 is getting overextended, Tucker, you just got to pay serious attention to that, because, those inflection points a lot of times act like magnets. And, we've crossed the border above. We may come back and retest. It looks like we've already done that this morning. We've gone up pretty significantly. I'm going to go back to the S&Ps. We had our CPI come out this morning. Not a big reaction. And when we get a lot of our automated systems, one of the filters that's probably one of the coolest filters in there is was there a previous day's close outside profiles? So, when we have a daily close outside profiles, like right there, that's a big deal, because that allows the system to really look at buying, former resistance, now support. So if you look at this and there's short-term breaths, I understand they got overextended, Tucker, but this inflection point probably takes precedence over something like that. And when that happens, this morning, obviously the stocks aren't open, but we've had the futures pull back and almost kiss this thing, 2068. This thing rounded off as 2066, and now we're 12 points higher. So that's my take on it. Inflection points take precedence over things like that, and these daily closes are extremely powerful. I don't know if I answered the question. Okay, so one of the questions is, and these are great questions. What's rising? How much of a lag is there from real time to the breadth indicators? Excuse me. Well, to answer that question a little better, in the scanner, we've got real time data pumping into this thing. I'm pretty sure, and we've had the lawyers at Bloomberg look at this, because they didn't want to be part of us disseminating real time data. So at no point can you find out what the actual price of anything is. These are all real-time price derivatives. And what's going on here with the breadth, if you go to the 4-hour, these are real-time, within 60-second calculations of what's going on in the internals to comprise these numbers that you're seeing. And this is doing it for a lot of different instruments across the globe. That's why we have quite a few servers running this, and spending quite a bit of money at the same time to do that. So there's not a lot of lag here, but we can answer more questions about it when we come back from break, and please throw them out there. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
And TFNN's going to power down right after the global market pulse here, and we're not going to do the 9 a.m. live show. We're going to pick everything back up at 10 a.m. So you guys get a break. Yay! Actually, it's awful to miss Larry for an hour, but everything's going to be back up at 10 a.m. Don't cry, please. Here we go. Let's take a look at a couple more Forex trades here. We talked about the yen. We talked about a possibility of a decent trade around 109.61, 62. Let's look at this Aussie dollar trade. We talked about 80s are the targets on this. It's really, really looking, I mean, you know, clearing some of the recent highs 2 weeks ago. I'm still looking at, you know, 79.80 on this trade. Every time we've looked at this to find support or trade breakouts, it's been you know, a pretty decent situation. If you look at the daily, how it's regulated this trade up, again, you know, we try to have a decent data sample and not be focused on one or two instruments. This is a good, you know, trade that's kind of let a fine wine breathe type scenario. Cut your losses short, blah, blah, blah. That's so easy to say. It's difficult to do sometimes. But as we look at some of these trades that have developed decently, they're really decent moves. You know, Canadian dollar, we talked about looking at this from the short side, trading, you know, at least blocking out the long side as it breaks through and crude oil kind of elevates a little higher. I think you got to be out of this trade before that OPEC announcement. Those are the big three. I'm kind of staying away from this British pound trade altogether. This is going to be so news driven as we compress into that June area where they're going to have the Brexit vote. So trying to stay away from that one. Let's take a look at Apple. Seems like it's in everyone's portfolio. You know, this is another good example too. You know, daily close, weekly close. This weekly close above 104, and you know, kind of consolidating above these unfair lows around 104, and then moving higher. This was basically the line in the sand for shorts. No more chances to short this above 104, especially when you get a weekly close like that, and you consolidate above. And now what's the trade on Apple? The trade on Apple, especially, and look at the daily, how that regulated the trade up from 104. Is still going to be the case. Now you've got support at 110, 110.73, excuse me. Again, you know, talking about closes, a lot of our automated systems will look at that. It's an option, put it that way. I want to take a look at ExxonMobil. Okay. We had 84.45 and this 84, 83. Let me see. Let me make sure. I can't see. Here we go. 84.29, previous unfair highs. A lot of congestion here. You know, if oil starts moving north off this OPEC announcement, you know, ExxonMobil looking, you know, it should have gone higher with the recent moves in oil, but any type of help on the 17th, you could see this thing really sky. But right now, I still think, looking at the oil sector and some of the things we've already talked about, you've got to be away from this trade right now. Are we going to break? Guys, I think okay, so we're going to shut down for an hour. We'll be back up at 10. Thanks for joining us this morning. Thank you.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.